Hello, it's ChewDog Charts. In a previous video, I talked about the risks from China. And China is quickly becoming a superpower. So if there's problems in China, it's going to impact the world. But if you remember back in the 2008-2009 crisis, nobody heard of Iceland. But when Iceland started to have problems, there were reverberations throughout the world. In addition to Iceland, Greece had issues, and then later on Cyprus. Well, today there are risks not necessarily as large as China, but still something we need to keep an eye on. And these risks are Italy, Spain, and most prominently Venezuela. Venezuela is a South American country that is quickly becoming a humanitarian catastrophe. It has defaulted on some of its debt after missing an interest payment due in October. Investors are meeting in Caracas to discuss restructuring $60 billion in foreign debt, and the country is in urgent need of international financial assistance. However, no nations are rushing to their aid. Under Nicolas Maduro, Venezuela is isolated in Latin America, and the United States, Canada, and the European Union have all imposed sanctions against Venezuela, so they're not likely to come to their rescue. Still, no indebted nation is totally alone in this world. I know that there's always international players who see opportunity in problems of others. So the hope of a bailout rests primarily with China and Russia and the International Monetary Fund. So who's going to come help save Venezuela? Before exploring a possible Venezuela rescue, let's take a look at some charts. In 1998, the year before Hugo Chavez came into power, Venezuela was a rich country. It produced roughly 60 barrels of oil per person. By late 2017, estimates indicate that production will have dropped to 20 barrels per person. That's a 66% drop in 20 years. Oil output per capita has dropped significantly in the past several decades. Going back to 1966, as this chart shows, oil production was as high as 140 barrels per person. However, even as the output steadily shrank, Chavez benefited from relatively high oil prices, which allowed him to boost revenue from petroleum exports. And as oil sales rose, so did government expenditures, as well as imports of food and other goods. However, the focus was taken off of the oil production, and there was minimal reinvestment. And if you remember, Chavez nationalized several companies, including several American companies, and kicked them out. Eventually, excess spending took a toll on Venezuela's international reserves. Rather than cut spending expenditures and imports, the Chavez regime piled up foreign debt. In late 2014, international oil prices began to plunge. Today, estimates indicate that Venezuela's public sector debt tops $184 billion, including $60 billion in foreign debt. However, of course, the Venezuelan central bank claims it's much lower. But here in the chart, you can see that both exports and imports were relatively high back in the period of 2006 through, say, almost 2013. And once the oil prices plunged, so did the exports and the imports and the Venezuelan economy. Now this chart here shows that their debt is $120 billion. However, the chart only goes through early 2015, and current estimates indicate that their debt is over $184 billion, as stated earlier. To service the debt, the government needs to pay $16 to $20 billion a year through at least 2022. That's a huge expense, which has meant slashing imports, which have caused food and medicine shortages. As a result, almost 54% of Venezuelan children are malnourished. To ensure the citizens' basic well-being, Venezuela must be able to import, on average, $1,000 a year per inhabitant, or about $33 billion a year. Data shows that it's currently bringing in about half of that. Venezuela owes $28.1 billion to China and $9.1 billion to Russia, its main creditors. In recent years, both countries have been eager to prop up the Maduro regime with little concern given to the authoritarian tendencies. So far, though, China hasn't opened their pocketbooks further. They have, however, granted Venezuela a grace period of about 18 months to pay off the debt it owes them. This is a modest concession, but gives Venezuela a bit of breathing room. China has also allowed Venezuela to use shipments of crude to pay off some of its debt, revealing that China's main interest really is oil. I don't think Venezuela should count on Beijing for additional financial help. For China to provide more finance and loans, Maduro's government will likely have to show some real signs of fiscal discipline. I believe it's more likely that Venezuela will bring more cash in simply by selling off existing stakes in oil companies and other resources that China would like to own. Russia has been more generous with Venezuela than others, and basically it's because the Kremlin benefits from having an ally in the Western Hemisphere, particularly an ally that is anti-US. Plus, Russia already has several oil interests in the country, including a joint exploration project with Venezuela's state-owned oil company. Russia and its own state-funded oil venture, Rosneft, have already helped with Venezuela, providing up to $10 billion in financial assistance to help avoid default. However, Russia has agreed only to restructure its bilateral debt with Venezuela, and the terms weren't disclosed, but they don't look to be anything like a real bailout. So the likely last resort is the International Monetary Fund, and the IMF actually may be the most appropriate source of a bailout for Venezuela, because neither China nor Russia is willing or able to offer huge sums of money to Venezuela that they need to stay afloat. Further, no country is likely able to match the super low 2% interest rate that the IMF offers to emerging economies. In the past, the Chavez administration had disparaged the IMF, saying that the IMF should either close down or vanish. Regardless, there are signs that the IMF is sketching out a possible rescue plan for the country because bank officials are viewing the humanitarian crisis as a possible spin-off affecting other economic collapses in Latin America. However, the IMF is unlikely to bail out the current administration and may wait for a subsequent administration before providing any bailout. So, although Venezuela is not necessarily a significant factor on the U.S., our economy, or the stock market, it is something to keep in mind because of the potential spin-off effects. So keep your eye out. And for now, that's ChewDog Charts. Thank you.